Traders, I'm looking at US oil on the daily time frame. So we have here a key level potential target. If this is to continue bullish, will be the high above this candle. And I'm just going to go down to 4H and get a bit closer to it. So on the 4-hour time frame, my bias is bullish. We've got, I mean, if it continues, we have the highs above here would be the next target, and then these highs. I'm looking at this green candle imbalance, bullish imbalance, one-sided trading, and there's nothing left and right of it. We could mark that up. So there's a key level of interest, given that this price range or this move here is currently trading it at a premium. So we're looking at a potential pullback to get involved at a discount, and my criteria for that would be if we pick up the Fibonacci, pulling it from this value area low to the high, the 50 to 61.8 would be an ideal level. I wouldn't be looking to buy at the current level, and I mean if it trades off from here bullish and leaves me behind, I'm willing to let it go. Right? I really want the pullback. You know, it didn't really pull back down in here. We had a minimal pullback, and then here slight pullback. You know, nothing really giving us a decent opportunity, and then we've got this, and I mean that might be it, and it trades north, but again I wouldn't want to get involved with this at a premium. So I really want to see it pull back. Yeah, it would have been a difficult trend here, or this move. It would have been difficult to get involved with this, given that it's pushing off with a vengeance with very little retrace. You know, so you're going to be buying at a premium on every price swing. So I'd be inclined to let it go. Like, I mean, this here is an ideal trend for me to get involved. You know, back over here, for example, you know, this high to low retrace. That's the kind of entry point that I'm looking for. Back here again, you know, this one here, high, low, and then you get that retrace into the 61.8 or 50% 61.8 Fibonacci. You know, again, up in here as well, you know, we got the pullback. It's really nice, okay. But yeah, along here, yeah, it's been difficult. So it's currently overextended. I want this move back. You know, we've got this imbalance that's unresolved. You know, given that we're trading into, well, we filled this gap here, you know, we might see it retrace. Yeah, that would be my thing, but be careful. The markets have been pretty volatile and unpredictable in the last couple of weeks. Again, you know, if you're in front of the chart, you could watch it. And so there's two ways to get involved. One is speculate with a limit buy. So I would do something like that. Stop around the low here, minimum 2R. Right, go for some targets. Well, that's a target there, I think. Yep, okay, so there's a 2R target. There it is. So that's speculation. So you could set that up, understand the risk. Can it pull back and take out? I mean, look, seriously, there's a ton of liquidity resting all through here, guys. Stop losses, and you know, quite often you'll see in a trend, especially lately, you know, the trend continues on. We get these pullbacks, and then out of nowhere, you know, you get that, and then it carries on again. You know, we get that, and then, you know, another dip down. So just be mindful that these dips have been occurring pretty frequently, and they've been really aggressive, right? So it trends up, and then bang, it trends up, and then, you know, that's the algos basically hitting stops. They're hunting liquidity, and there's always liquidity resting under, you know, a low like this. That's where the stops are resting, and same thing over here. There'll be stops under here, so the algos are set to take it, you know, and I mean, this entices buyers going in for the 50% pullback or whatever, and they get comfortable with that, you know, and then all of a sudden they get taken out. Right? So this is, in my opinion, is absolutely deliberately set up to sweep liquidity. It's the same story with this, you know, now we've traded up and we have this price swing, but just don't underestimate this happening, you know, and then we're off again, you know. So just be mindful of this possibility, I guess is what I'm saying. Right, so we have this value area down here that could get targeted, you know, for the stops that are sitting under here. There's also a ton of stop losses resting under this range all through here. So that's definitely a target for this to pull right down into. Right, so just be aware, guys, you know, and trade accordingly. So you've just got to manage your risk in this environment. And the other thing I would say with this would be, if you're in, well, that's speculation. You could try that, maybe even go for a wider stop, take it down, I don't know, below this gap, if you like, and trade it on a 4-hour time frame. Let's just have a look at the 4-hour chart and see what that looks like. And then you're going to go for this high up here as a target. That gives you like a 3-hour target. Now you go for the go under. Yeah, just go under this low. So there's a 2.87. There's nearly a 3-hour target. So if this is going to continue bullish, that's a nice outcome, right? That could be a nice trade, right? Wider stop, and hope to avoid the volatility. And it may or may not happen, but you've just got to factor it in and understand that it has been happening. So you want to be trading with minimal risk at the moment until things shift in the markets and we start to see, the markets steady up. I mean, have a look at the VIX and you'll see the spike in the VIX. Okay, so if you're not familiar with that, check it out. Do some research on the carry trade. Okay, so the markets have been pretty chaotic over the last 2 or 3 weeks. So I'm hoping to see the markets starting to settle. We've got possible lowering of rates coming up, maybe 25 basis points by the Fed in September. The market's kind of steadying possibly on the back of that and more or less getting priced in. I think investors are jumping in bullish, with the stock markets. So, yeah, I think moving into the September events when the rates are announced, just want to be careful around then because that could be pretty volatile. Anyway, long story short, if you're not in front of the chart, well, there's an idea for speculation. If you are in front of the chart, you could watch it probably into today's New York session. But I really want to see this trade back down into this imbalance and find support, and then hopefully that sets up. Okay? So that's my take on oil at the moment. Again, I mean, look, this and wait for the break of market structure bullish before you get involved. That could happen here. It could happen down in here. It could happen a little bit lower, okay, because they might target possibly stops under here. That's a possibility. All right, so I'm looking at this range from this low to this high and just looking at what we've got in between. We've got this imbalance, even on the 15-minute time frame, there's an imbalance here. So we've got this nested imbalance, and we've got a bullish order block down here, right? So the imbalance is the first target. We've got a bullish order block. What else? We've got this value range, and then we've got liquidity sitting under this. I mean, there's these possibilities around here where this could look to rotate, and it could just completely tank, guys. I mean, all right, get ready for that too. So I guess the bottom line is, see this, don't do anything until you see a range and a break of market structure, a bullish break of structure, and the retest of the range. There's your break of structure, right? And then this here is the retest of the range, and that could be the AQ, right? Wherever this sets up, here, up here, further down, or whatever, all right? That's the setup to look for. So at the moment, I'm not touching this. I want to see a pullback. Okay, guys, that's it. I'd love to hear your comments on this. Definitely do that. With that, I hope you have a great day, safe trading, and we'll see you in the next one.